We'll get Richard in here shortly. I'm going to go ahead and tweet out that we are live. And while I'm doing that, maybe Brian, you want to kind of walk us through some of what you've been trading this week, how you've been approaching the market?
Yeah, sure. It's been a good week, and I've been cautious about this market, even with this rally here. And the market's pretty impressive the way it's holding on to its strength. We're above some levels that are making it more encouraging, and if we can hold in this general area for the next week or so, it's going to look even better. And we'll talk about that a little bit later. Why? But this week, Bros was a really nice trade for me. BROS, the coffee company, got stopped out of that. What was it, yesterday or 2 days ago, on the balance of that one. And I'm going to be looking to re-enter that. Took about a 10% gain. I typically sell in three pieces. One, generally the first day, if I can, if it rallies quickly, just to reduce my risk. I like to go in heavy and then sell a third real quick. And then I raise my stop on the balance. And if it continues to go, what I'll typically do is I'll raise the stop on half of the balance real tight and give the extra third, which was stopped out yesterday, a little bit more room to run. So now Bros is settling in. I think it could probably pull back another 2 or 3 days and maybe set up into next week for a more powerful rally. But that's been a good one for me. Also, Arco has been a good one. I actually just got stopped out of that one, but I was along there at 752 and sold also in three pieces. Last piece was stopped out today at 797. So that was a good stop because it's now 20 cents lower than that. I'm in Alto, ALTO, these guys. It's looking like a nice breakout. There's a big short position in this thing. And again, I've already sold a third as it broke out today above 651. And, I mentioned that on Twitter today. And it's funny, how people want to judge you for your trades, especially when they're successful ones and ones that, go within my discipline. It's my discipline to sell some on the breakout after it's run 15% to get there. And now I've still got a substantial position in this stock, and it's, performing very nicely. So on the short side, I've got AVTR, which really isn't doing much for me so far. It's right around this area. I'm actually shorted at 33.80, so I'm up 18 cents on it. But it feels good to have a little bit of a short position, just because of the way this market is, and kind of it. I don't like to hedge, but it acts as a natural hedge against some of my longs because I'm short based on the merits of this particular stock, not based on, hey, I have too much long exposure. I always think you have to take it, each stock by itself on its own merits, manage risk based on what that stock does, not not based on what's going on in Russia and Ukraine, or, based on gold or anything else, or oil. You base it on what's happening in that stock. So I'm also long Lockheed at 445.50. I sold a third of that one today for a gain of $4.50. That's 1%. And now it's reduced my risk. My original stop in there was 434. Now the stop on the balance is up to 442. So essentially I have all the risk out of that trade. So that's how I like to manage the risk in these things. I'm also long DNOW, which I put on Twitter yesterday. I put Alto on Twitter yesterday, and I put DNOW on Twitter yesterday. In DNOW, I have yet to take any off, so it's a full position long. And I don't really like energy names, but it is an energy name, so I might trim some just around break even, simply because I don't like energy names. But that's the positions I'm in right now. I've got a bunch I'm looking at that we can talk about, or get to other questions as they come up as well.
Very interesting. So ALTO, that was the first one there?
ALTO, yeah, I mentioned that one yesterday, and it was I don't know. Let me look at this chart here. It was I forgot what price I I actually owned it a little bit lower, but I put it on there at $6.17. So it's up 60 cents or 10% in a day. That's a nice move, and it's got a good size short position in it. 12% of the float, almost close to 13, and that's 9 million shares. So, we're breaking above the volume weighted average price from the high a year and a half ago. And that tells me the shorts can't be feeling really good. I put a picture of a lobster trying to escape a pot on that chart, because that's how I think the shorts have to feel. They feel the pressure boiling under them. And this one could get pretty exciting to the upside, but I don't like to get too excited about the stock. I just raise my stops and listen to what the stock tells me, and if it pulls back, I get stopped out. If it pulls back and it starts rallying again, I'll either try to get back in or let it go without me.
Awesome. Appreciate the insight there. Yeah, I was looking at the chart there. Looks like, did you take that one right off of? It's kind of nicely stayed above its year-to-date anchored VWAP.
I actually, if you look at my tweets from yesterday, I put a number of reasons on there, and more so than the year-to-date VWAP. What's important on this one, Gav, is the volume weighted average price from the high in 2020. That is really kind of more relevant here, but it's also good, as you pointed out, that it found buyers. So about 2 weeks ago, they reported earnings. It gapped up and then it failed. It came down and tested that year-to-date VWAP, which was also kind of the same location as the 200-day moving average and the advancing 50-day moving average. I first started nibbling on this at about $6.08 per share. I added to it after my tweet yesterday when it was $6.17. And got pretty aggressively heavy, very aggressive actually on the long side. So it feels good to take some off as it breaks out. Now I've assured that I have a profit in here, my stop on the balance. I'm not going to let this thing turn to a loss. The only way I can lose is if it gaps down for whatever reason. So to me, it's always about risk management. And where does it have the potential to go? Maybe towards last year's high is an initial place that it could run to, up at about $8.36. It looks like. So I don't do price targets, but I'm aware of that level. I'm also aware of this high that it had in summer of last year at 705. That might be a place where if it gets there, I might lighten up a little bit more, just because it's, getting a little bit extended, and that's how I trade them. And, that's my style.
Awesome, Brian. Love the insight there. And I'll try to go through and find a couple of those posts and pin them. Okay. So for anyone that's in the audience, first off, thank you for joining us. I see a couple hundred of you already. I did put out a tweet about this space. If anybody can share that, that would be huge. I tagged our speakers, our co-hosts, and we will get rolling. I think we could double up the size of this space pretty fast. We also have a couple other people in here. Tommy, what's going on?
Hey, thanks for the invite, guys. It's a pleasure to be here. Thanks for sharing your thoughts, Brian.
Yeah.
Love hearing it.
Yeah, definitely. Tommy, if there's any tickers that come up in your mind during this, feel free to throw them out there and we'll get some analysis.
I actually got one right now that has been, I think, on everyone's radar right now, which is NVIDIA. And I think what's really interesting, whenever NVIDIA happens, is that we get all of that kind of semi-chart trending like AMD and MU. But from your perspective, Brian, when you see the price action on NVIDIA, what comes to your mind as far as okay, what else is happening?
Well, yesterday, 2 days ago, it got right up to the volume weighted average price off the all-time high. And news came out that they were introducing a new chip or something. I didn't really read the news. I saw a bunch of people tweeting the headline. And then it sold off right there. And that didn't surprise me, the little sell-off that we saw. What has surprised me is how quickly it came back and pushed through that level up $24 here today. So I think it's telling us a lot about this market, kind of as you said, that, in regards to the semiconductors. I mentioned yesterday that, they were the girl that we brought to the dance, and they were underperforming and maybe not looking as pretty, but here they are today breaking higher. I think that yesterday's lows in NVIDIA and the semiconductor index and a lot of these other names is going to be an important low to measure risk against for the intermediate term, and it's really impressive. It's probably, if it runs a couple more days, I think it then pulls back towards the 50-day moving average. I put a tweet out, I think it was last week, I don't remember, about how I keep a vertical line of where the market was 51 days ago, so I know so I can anticipate the direction of the 50-day moving average. I anticipate the direction of the 5-day moving average as well for my entries, but I consider rallies with a declining 50-day moving average generally as guilty till proven innocent. So this one, I'm treating it a little bit suspiciously, but I'm impressed with it. I would prefer that it rallies up, maybe another day and a half, then it pulls back 3 or 4 days. And by that time, that will be, let's say in 5 days, 45 days ago was January 20th, and looking at the SMH, it was at 276 and closed that day at 276. So what that means is that 50-day moving average will start to flatten out, and once we have a flat to rising 50-day moving average, then it tells us that the institutions are regaining control. And maybe the worst is over for the sell-off. I'm not quite there yet. We're in that messy stage of, we've been in a bearish cycle, but now we're transitioning potentially to the buyers regaining control, and everyone wants an answer. Are we bullish or are we bearish? Well, right now it's a little bit indecisive. And, I talk a lot about the market, but I don't really use the market to tell me what to do other than maybe position size. It's more about the individual stock. So, when I bought Bros, last week when the market was really not looking great, it was one of the early leaders. I got involved in it based on the action in Bros, nothing to do with the overall market. So it's always about the individual stock first, each trade based on its own merits. And then if the market overall backs me up, then I'll go a little bit heavier.
Can't believe you're doing this and spreading this information for free out there, Brian. It's phenomenal to hear you talk about this stuff. So much wisdom to be earned.
Well, cool. Thanks, Gav. Thanks for creating the platform and kicking me to do it.
Hey, that's my pleasure. Thanks, Tommy, for the question. Richard, let's get you involved in this too. What have you been up to this week? How are you approaching the market? How are you feeling with the SPY and Qs? What have you been trading?
Yeah, sure. First of all, Brian, always great to hear your thoughts and hear kind of how you're approaching things. Always take away something new. This week I've been decently active, traded a few things, made progress overall in my account, did get some stops here. So first up, we've got Scdg. I entered this on that Tuesday as it was basically breaking out earlier in the morning and eventually made its way through that high. Unfortunately, I got stopped on that pretty much even the next day. It had a gap down a little bit in its character here to gap down within this flag, but so far it's recovered and acting well and maybe setting up another pivot. Also traded STNE through its high volume close, which is the close from 318. That was over 65 million shares. Traded that on that Tuesday as well, made nice progress. I've got a half position left in that stock. GFS has been a frustrating one. It's obviously dancing with its all-time high pivot up near 73.18. I positioned in it yesterday, got stopped, then repositioned today in a half size. Right now it's acting well. It actually just kind of pushed really nicely just in the past 15 minutes. But a little bit short-term extended on that day, but trying for that all-time high. But I'd love to see maybe an inside day and then a breakout through that inside day, be able to basically add on to my existing position, make that a full one. This one is showing a lot of power, great volume profile as well on that move up. Last week we had basically above average volume with strong closes, 4 straight days. That Thursday 317 close wasn't great, but I love seeing the volume come in, and overall looks like it's acting well, and definitely a recent IPO that I'm watching pretty closely. SG Sweet Green, another recent IPO I've had on my radar. Traded it on Tuesday, got stopped the next day, And then we had a pretty much a similar setup where we retested kind of a pivot around 31. Big upside reversal today, and I'm back in this stock from around 32.20 or so, making progress so far, but still has to prove itself and kind of break out of this short-term downtrend, this pullback to that prior pivot. I love to see a nice strong close tomorrow, and basically want to see it make its way back towards up the right-hand side of the space. So that's pretty much what I've been trading. Also, GTLB, super powerful off the bottom. Trade that for a small loss yesterday. And yeah, that's pretty much what I've been up to, but always like hearing everybody's thoughts here, especially Brian's, and seeing what he's in and what he's looking at right now.
Sweet. Awesome.
Mutual Admiration Society, Richard.
There we go. There we go. Okay, so let's dive into a little bit of this, and stock market news, I'll bring you in on it too if there are names. Also, to the audience, we're happy to take some tickers from you. So I'm just going to put out a post and ask, what tickers would you like our panel on Spaces to analyze right now? And I'll take some tickers from there, but I'll drop a couple to Brian to start out with, and then we can kind of go from there. So let's see what has been trending out here. So Brian, I think we have to start out with some Tesla. And then in addition with Tesla, I would like to hear your thoughts on Upstart.
Okay, Tesla has been, a rock star here lately. Kind of, similar to what we just spoke about in NVIDIA. And it's easy to see where, the institutions are looking to put money to work, and they go to these mega caps that trade, tens of millions of shares per day at a high price. It's easy to put money to work in these names. And we've had this rally from, basically 750 to 1,000, 33% here in 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So, huge move in 9 days. It's possible it could continue higher. Today it's, forming an inside bar. Today's high is lower than yesterday's high, and today's low is higher than yesterday's low. It's holding just above the volume weighted average price from the all-time high, for 3 days in a row now. So, the strength is just super impressive here. I wouldn't be surprised to see it pull back down towards 950-ish, kind of rebuild, and then a better entry. I think, getting involved up here is definitely chasing, and you've got to be shorter term oriented to think that you're going to be able to, get involved in this and make money. In other words, you have to have a tight stop. Either that or you have to have just a massively wide stop, which wouldn't make any sense to me. So, I would avoid it for now and, raise your stops depending on your time frame, maybe below yesterday afternoon's low. We held above that this morning. So if it were to get back below 984-ish, then I would say maybe take a little bit off and look to replace it, sometime next week. If we get, let's say it pulls back tomorrow, Monday, Tuesday, Wednesday, it does maybe an inside day on the downside. And then, this time next week, maybe it's ready to get going back to the upside again. But, tight stop if you're getting involved here with fresh money. Otherwise, be a little bit patient with it. And then Upstart, UPST. It's still kind of stuck in no man's land here. I just, it's just kind of dead money, it seems like to me. The 50-day moving average is just starting to flatten out. I mean, if it were to get above the high of this week, it would have to get above 130 and change. Then maybe it could go to 150. But, this is the type of stock that reminds me of the phrase, if they don't scare you out, and it's declined from 400 down to under 100, down 80%. If they didn't scare you out on the way down, I think you're going to need to see some sideways consolidation. And the range, though, of any such consolidation could be where it's been for, this year, which is a pretty wide range. So, 78 up to 163-ish. To me, I just think there's better opportunities out there. It's unless you're focused on trading that name specifically, I don't see much advantage of getting involved here.
Okay. Thank you, Brian. All right, Richard, and for everyone in the audience, I did go ahead and put out that tweet. It is pinned up top. Please feel free to go ahead and drop any tickers that you would like analyzed, and we will take a look at them. So, Richard, let's do LMT and APPS.
The first one was LMT, Lockheed.
Yep.
Yeah, so this one has been on my radar. This entire group, RTX, there's a few other kind of defense-related names in here. Leidos as well has been pretty strong. Really nice move from LMT back in late of February. Nice push up. Now it's kind of forming out a little bit of a consolidation base against that 21 exponential moving average. And it had a nice inside day on Tuesday on below average volume. It pushed up a little bit the next day. And now it's kind of continuing that push a little bit, but kind of wedging up a little bit here on lower volume, but nevertheless breaking above a little bit of a pivot from that Monday high here today through 447.50, that general area. Personally, I'd like to see maybe a few days of pullback, maybe back to that 21 exponential, kind of one last consolidation, then see a big push on volume, because recently it looks like the down days are in higher volume than the up days. And in general, I want to see that kind of ratio flipped a little bit. Bringing up APPS, I know there's another former leader a lot of people have their eyes on. Still below that 50-day moving average. It kind of got rejected off that area yesterday on Wednesday. Looks like it's closing strong today. Nice action off that 21 EMA. It's good to see it back above that moving average. But this still has a little bit, or yeah, not a little bit, but a lot to prove here before it kind of decidedly starts another uptrend. Below a declining 200-day moving average as well, which has been resistance in the past, back in late December of last year. So still has a lot of work to do. I'd love to see it kind of consolidate here for a little bit, flag out, then kind of break through yesterday's high on volume, get back above that 50-day moving average, see that moving average kind of flip back to the upside, curl up under price, and then maybe we can see a more sustained trend here. But powerful off the bottom, but a lot of kind of those beaten down names can have really sharp oversold jumps and still kind of continue their downtrend. So be cautious with this one. Not really high up on my list, and yeah, still a little bit wait and see with apps. Although I know a lot of people are still looking at this one because of that really tremendous run it had back in 2020, 2021. But right now the trends kind of changed. It's very choppy, and if you just zoom out, you can see how pretty much since March of 2021, this has changed character. It's gone wider and looser. And since basically early November, we're in a sustained downtrend below that 50. So wait for it to kind of change character before really focusing on this one is what I would say.
Okay, perfect. Thank you. Stock market news. You want to throw out a couple of tickers for Brian?
Oops, sorry, took an extra second to get back there. I always love to throw out some tickers. My first place I like to go for tickers for Brian is on the 52-week high list. I feel like last week when we did this, it was barren. There was no choice. I'm not saying we have amazing amounts of choice here, but at least it's a little bit more. So I'm going to throw Union Pacific at you, UNP, and then let's do Bristol Myers as well, BMY.
Okay, Union Pacific, choo-choo. Just chugging higher. These are a railroad, right? Union Pacific, yeah.
Yeah, those are good references. I like the puns.
Good. The train has left the station here. It's, as you said, it's at all-time highs and just chugging higher. So I think that, you raise your stops up probably towards the low of this week, or maybe last Friday's low where this move began, then you'll be pretty safe. It's been holding the week-to-date volume-weighted average price. It did on Monday. It did on Tuesday. It touched it on Wednesday. And that week-to-date VWAP is currently about 266.5. So, shorter-term traders might want to, set a stop below there. But innocent till proven guilty, raise your stops. Looks good. Bristol Meyer, kind of the same story. It's been a steady uptrend since December of last year. Really just been riding since February, really been riding this rising 20-day moving average. That's currently at about 69.5. So it just accelerates to the upside. Longer term, looking out to a weekly time frame, this move past 70 got it beyond, highs that were touched in 2018 and late in last year as well. Now, if it's going to make a run for new highs, that gives you the highs in 2016 up near about, what is that, 77 or so. So up near 77, I would consider, really maybe taking a little bit off as it's getting extended up towards there. But, same story as Union Pacific. It's in a great uptrend. Manage your profits. Don't let them turn to a loss. If, every stock goes through the cycles that we just saw in the tech stocks. So, letting your guard down and becoming complacent is the worst thing you can do. I always say that, people say, winners take care of themselves. And that's absolutely not true. You've got to manage them just as much as you manage your stock right from the start. It's always about risk management and making sure that you have systems in place to lock in your gains for when they eventually, enter the down cycle, because every single stock will turn to a down cycle at some point. And as we've seen, the ones that people fall in love with are often the ones that get hit the hardest. A lot of the tech names that were down 60, 70, 80, 90%. And people are still trying to pick the lows in those things. Focus on these names that are in uptrends, buy them at smart places, and protect your profits. So, they both look great. There's nothing wrong with these stocks. These are the stocks to own.
Awesome. Thank you, Brian. I just want to say one more time, I very much appreciated all the Union Pacific train puns in there. It was great.
All right.
I thought I was just, never mind. I was going to do another one, but it wouldn't have worked.
Oh, boy. All right. I got two more here for Richard, and then Tommy, I'll actually bring it back to you if you want to throw a couple more out to Brian. Richard, Airbnb and AMD.
Yeah, sure thing. So Airbnb, I've actually got that up on my chart right now. It's breaking through Tuesday's high at 168.18. It had a nice inside day on looks like the lowest volume, really going back a few months here yesterday. So that was very constructive, and it's breaking out today. You could have bought through basically the prior day's high, yesterday's high, or that Tuesday high. Nice action. Back above that 50-day, that 21 EMA is in an uptrend. Personally, I have not had very much success trading this name. It's very choppy. And even when it was back in the uptrend back in August into October, I somehow was able to get a bunch of stop in here and make no progress in this name. So maybe you can change character, and I'll keep an eye on this. Still a lot of work to do getting back above that mid-February high here. But making a strong start today, so definitely one to have on your radar. I know a lot of people like the story here. I basically like to combine the story and the technicals, and this might not be the strongest stock out there, but it's back above those moving averages, which is a good start. Bringing up AMD, obviously the semi super strong today. NVIDIA leading the pack. This one breaking out above that Tuesday high, right at the confluence of the 50-day, the 200 SMA. So that's really nice action on good volume as well. This has kind of been lagging NVIDIA a little bit, but nice push today nevertheless. It's got a little bit of work to do to start building out the right-hand side of that base. But today is a promising start, and I love to see this continue to push up and get back above those moving averages and start that right side. Let me do another one real quick because I saw Mike wanted this one in the chat. ENTG, another semi-related name. This one looks a little bit more developed than AMD. It might be lagging a few of the ones like GFS, ACLS, but still acting pretty well today. Looks like it's right at the highs right here, and you've got a little bit of confluence right at this 136 area, which on Tuesday it failed. So we'll see if it can finally push out of this level, but it's above that 200-day 21 EMA. 50 SMA is flatlining and might be curling up soon. So another semi-related name that's potentially viable sometime in the next few days and weeks. So thought I'd throw that one out as well.
Perfect. Tommy, you got some?
Yeah, so dude, Tilray is popping off on the streams right now, plus 16% going into the close. I'm curious if you have any thoughts about that.
Let's take a look. Oh, were you talking to Richard? I'm
Oh, no, no,
sorry.
no, no, no. I think he was talking to you.
Oh, okay. Tilray is one that people have been trying to find the bottom in for the last 3 years. And they get excited every time one of these little 15, 16, 20% rallies occurs. And, every single one of them has failed since, the peak of last year when it ran, into the 65s. And people have memories of that, thinking that can happen again. And maybe it can, but we've had a bunch of these, 20% plus rallies, and it's very impressive. I mean, if you're in it short term, then again, the same thing. Don't let these profits turn into a loser. It's up from, under $5 per share to 666 right now. So, you've got to look at these moves and say 25% moves in a week aren't normal, especially in a stock with a declining declining 50, 100, 150, 200-day moving average. These are still bounces and downtrends, and there's nothing wrong with short-term trading them. I certainly wouldn't be a buyer here right now with it up, what is this, up to, 16%, like you said. So if you're in it, just know where your stop is. Don't let these things, don't get sucked into the stories, because we've all seen how all these story stocks, end up being. And, maybe it's the next AMC, maybe it's the next GME. If it is, it goes without me, and I'm okay with that.
Quickly, on this Tilray one, there was a news story that did just come out that's pushing all the wheat stocks higher. It's talking about how the federal marijuana legalization bill officially scheduled for House floor vote next week. So it's not like anything passed or whatever. They're just going to be voting on it early next week, and that's what caused the spike in all these stocks.
That could be a buy the rumor, sell the news, that maybe it continues up to that point, and that if it does get approval and it's up near 7.5, it's and then a bill passes, it's you've got to ask yourself who's left to buy it, and that's probably a great opportunity to sell the news if that's the case. So if I owned it, I would certainly be aware of when that vote is coming, and have my finger real close to the sell button when that news is actually released, good or positive or negative.
Awesome.
Okay, I'm just going to quickly come in on that because I am seeing it. They'll take up the measure in a meeting on Monday afternoon, but just want to get that in there.
So there you have it, Monday afternoon. I would be aware of that if I was involved in this stock.
Okay, cool. Keeping an eye on it. All right. I got a couple more here, and I'll throw one over to you, Richard, actually, because Gerg's in here. Do you want to do Intel, INTC?
Yeah, sure. Let me bring up that chart here. Yeah, so this one looks like it's really ripping today, up 6.5%. But I always like to zoom out a little bit, look at either a daily chart, looking back at the past 2 years, or going to a weekly or monthly. And this one really is the definition of choppy and hard to trade. I mean, this has pretty much gone nowhere, just up and down. Looks like a sine curve. And it's super strong over the past few days. But I think there are better options within the semi-related field that have more constructive charts that are in longer term uptrends and have kind of much cleaner charts where you can manage risk. So that's kind of my view on Intel. Obviously super strong today, definitely a little bit short term extended. It's running into the 200-day moving average area. So that's definitely something to be aware of if you're long here. But maybe this is a changing character. If it could kind of flag out, tighten up, resume higher, break above that 200-day, that would be super constructive. But yeah, this isn't super high up on my list when there's a lot better looking semi charts out there, in my opinion.
Brian?
Yeah, if I could just chime in real quick on this, I think it's important to look at a stock like Intel. And, this was, back in the day, Jim Cramer called, this Cisco, I forget what they were, the four horsemen. They were the NASDAQ leaders that led the market higher through, the late 90s into 2000. And, these stocks could do no wrong. They're very similar to a lot of the big leaders of the last couple years that have broken down hard. Zoom, Peloton, PayPal, you name, some of the upstart. And people look at them, at those stocks today and think, well, they were just trading 80% higher. I can get in now. It's a deal. Well, go back and look at the longer term chart of Intel. And, we're still not, it peaked in 2000 at, 70 and change. And we've never been higher. 22 years later, we still haven't eclipsed that peak. So, people who are, buying these stocks, expecting them to go back to their former levels, just, look at a couple historical examples like Intel and Cisco and realize just because they were at a higher price once before doesn't mean they'll get there again. And, that's all. Just, be aware of those types of cycles.
All right, Gerg, I need to hear your thoughts here.
I mean, I'm the biggest Intel bull on Twitter. Intel is a revival growth story that everyone is ignoring for some reason. That's why I'm even more bullish. Every chance I get, I buy more Intel. And look at what's happening. I think this is just getting started. So far, I'm up 11%, but Intel will easily be above 120 before the next 2 years. Intel is going to spend 100 billion in R&D and in building new facilities, 30 billion in the US, 40 billion in the EU, and they're planning another 40 billion. And the best thing about that is almost 45 billion of that will be in subsidies by Italy, Germany, and 3 more EU states, plus they might get additional 20 billion by the US government, so basically free money. So the only thing is, if you have a short-term time horizon, I would not buy it because this year the revenue will be almost flat or close to flat, only at 1.2%. Next year, I project growth to be 3%, but the 2023 Q2 is the quarter and it's the year. All of the investment start to show results because whenever you build a new chip facility, you need at least 2.5 years to 3 years for that to start making money or start to pan out. So whatever they're investing right now will start to show results into 2023 Q2. So if you have a short time horizon, I would not buy Intel, but Intel has a great dividend too, almost 3%. So basically, you're gonna get paid every single quarter to hold the company. They're gonna double easily. And when I was buying Intel at 44, I think there's not even a single stock in the market that has a better risk to reward. Intel is dirt cheap. Intel has been left for dead for some reason for the last couple of years. The only thing is, Intel, the revenue was stagnant because the management got greedy. They sucked. But in the last 8 months, they have done a complete revamp of the entire C-suite from the top to the bottom. They got the ME CEO, they have a new CEO. I like the new CEO, very, very hip guy, knows how to talk to these investors. Like every single day he's out. In the last 4 weeks, they have announced potential 5 M&As. If they see a deal, they just go buy them out. Yesterday, they had one from, I think, Israel that to help them with the foundry and help them, I think, with ARM. Before that, they bought another 6 billion, and they also want to participate in the ARM deal. But I think even yesterday, NVIDIA CEO said they might need Intel. So I don't think Intel is going anywhere. And in the next 3 years, they should be trading at least 15 times earnings. And assuming the growth is around 20% by then, they should put Intel around $112 a share, minimum.
It's definitely the fundamental versus the technical case here. I think
For
as
me,
we're
yeah,
seeing
like
it.
technical, I couldn't give a damn. Like this is too cheap to ignore. Like
Brian?
short term, Technicals matter, but in the long term, technicals don't mean they don't mean shit. Like technicals can be garbage in the short term, but company can still perform really really well in the long term. If you have a short term time horizon, look at the technicals. But if I'm investing, I don't give a damn about the chart. I don't even look at the chart sometimes. Like if I'm buying something with a 2, 3, 4 year time horizon, that is dirt cheap. That's being ignored by the market for some reason. I don't care about the chart. I could give two down.
Brian?
I thought this was a trading show, in all
It is.
respect here, but
It's fair.
talking about the risk reward, but not mentioning any risk, saying things will easily double. Nothing comes easy in the market. Doubles don't come easy. I don't understand where people get the confidence to make these types of, assumptions about where price will go. When you mention the risk reward is excellent, but all you mention is reward and no risk and no price-based risk, then to me, it's just through one ear out the other, and I get really frustrated listening to it. It makes me not want to come on to this, and listen, be exposed to this. It's just so contrary to anything I do. And I'm not trying to complain, Gav. What I'm actually trying to what I'm trying to point out is the difference between trading and investing. I could give a damn about the fundamentals of the stock if the stock is going higher. It's just the complete opposite. So I respect what what our other guest here is saying, but it's Chinese to me, and
Apples and oranges.
Yeah,
I hear. Okay, well, I'm glad I kind of got to hear both sides. And I hope this helps for the audience. But
At 9 times earnings, that company investing so much money. I doubt we have a downtrend more than 5% with this name. If this goes down 5% more than monthly entry, I will double down. So that's what I don't give a damn about the chart. And the company is just too cheap to ignore. That's why the stock has been almost flat for the last 4.5 years.
I'm going to ignore it.
Well, all right, we're going to bring it back to the technicals, but I'm glad I got to hear the fundamental case. And if there's other ones that you're interested in, any technicals, Gerg, feel free to throw a name out. But I
usually don't care about technicals. So
I hear it's difference of opinions, but for sure. Okay, all right, we're going to bring it back to the technicals for a second. I actually want to grab, since we have a bunch of people here are kind of in Market Madness, I want to grab a couple names from Market Madness here and throw those out too. And so, Brian, I will bring you a couple names here that have been kind of seen as potential contenders here, and people have been really, really, focused on them and picking them to go all the way. One of them is Google, and the other one, which we were seeing kind of a surprising amount of people voting for, was Spotify.
Let me take a look at Spotify first, just because I haven't looked at that in a long time. It's still in a longer-term downtrend. I guess the good news is it's come down to the levels where it found support in 2019 and 2020. But it's still in a downtrend. It's coming up to the declining 50-day moving average at 165, and at 170 is the year-to-date VWAP. Last time it hit the year-to-date VWAP, it gapped down from 190 to basically this level last time. Not saying that would happen again, but it's got great momentum in the near term, so hopefully it can continue higher until the end of this little tournament. It looks like a dark horse to win because the primary trend is lower, but you never know. Sometimes that's what's good about these types of contest is that you throw out a real long shot in hopes that it's going to turn itself around, and you don't actually lose any money if you get it wrong, but you can maybe win a contest. Whereas Google is similar to Tesla and Apple and Nvidia. It's one of these names right now that you can see that institutions are trying to put money to work quickly, and they're going into these mega cap names that trade millions of shares at $2,800 per share. It's easy to put a lot of money to work quickly in here. And I think it's kind of, giving us a little bit of encouragement for the overall market that there might be, the ability for this rally to hold. So Google, I mean, it doesn't seem like a contest stock to me. I would say if you were in a contest, you want to go with, maybe a little uranium play or or even this ALTO, but you're not going to get huge percentage moves in Google. But the trend is clearly higher here the last 2 weeks, so it makes for a decent pick. But I wouldn't think it'd be a winner because it's just so much harder for a huge percentage move on a $2,800 stock versus a $3 or $5 stock.
Yeah, well, I mean, we chatted about this a little bit. It's all social sentiment based, not performance based in the Market Madness tournament. So, stuff like Google and Apple are definitely pulling a lot of votes, even though
Right.
they're large caps and they may not move as much.
Gotcha.
Yep, a little bit of balance. Awesome. Thank you, Brian. Okay, Richard, want to bounce a couple off you, and then stock market news. I want to see if you have some more to throw in here. So, Richard, curious on your thoughts right here on Mara, MARA, as well as PL Planet.
Okay, so Mara, this obviously is kind of a crypto correlated name. Looks like it's starting to push up off the bottom here a little bit. Strong action today, recovering well off the lows. Back above the 21 EMA, the 50 SMA is curling up under price as well, so it could be starting another push up here. But it does have kind of a resistance level at 31, or a potential resistance level at 31.44, which is that high from 210, and we're still below that 200-day moving average. But overall, kind of a nice look to this overall base here, kind of classic bottoming or potential bottoming action here recently. And we'll see if it can push out through these pivots and start a move up back through that 200-day moving average. But obviously, it's going to kind of move with Bitcoin. PL Planet Labs, this is one I've never even looked at the chart before. Looks like it was a SPAC, and now it's back at $5. Not a great look overall, but you do have it, tightening up a little bit here. We've got a little bit some short-term higher lows forming. It's back above the 21 EMA, stuck below the 50 SMA. Let me drop a anchor view out from highs, still below that, well below that. That's all the way up at 6.78. So looks like it's contracting here. Maybe you could trade it for a quick swing trade through recent highs around 5.5. But yeah, not really on my list. I don't know anything about the fundamentals for this name. But we'll have to see what happens. It's got to push through that 50-day and, make its way towards that anchor go out before we really start a new uptrend. So yeah, those are my thoughts on those two.
Perfect. Stock market news. You got some more?
Yes, sir. Sorry. Let's hear CCJ, my first round matchup, and maybe give me Shopify too.
Did you say CCJ?
Yeah.
Yeah. So Kamiko is, all these uranium plays are hot. I'm looking at, DNN right now, but this would because DNN hasn't had the type of move that CCJ has. In other words, it's kind of still consolidating here. So it hopefully will follow CCJ. CCJ has been the leader up from 23 last week to, hit 30 and change today. So I think it needs to settle down a little bit. And, ideally, it can hold above 28 and correct more through time. So far it has. It's basically gone sideways for the last 4 days here. So that's a sign that dips are being bought. It's in a great bullish uptrend. And like I said, if you missed CCJ, then you might want to look at, DNN or let's see, UEC is looking like it's getting ready to get going again. 4Us is also kind of wound tight here and looking like that could get going above 1050 or so. All the uranium plays are strong.
Yeah, that's going to be an interesting first round matchup. For anyone that's kind of listening in, we're taking a look right here on, it's actually it's the link in my bio, marketmadness.co. It's a giant March Madness spin-off tournament we're doing for financial assets. And Apple is in the first round against CCJ, which is kind of getting crushed just because there's a lot of name brand here to Apple. So something to kind of look at. All right, Tommy, you got any others that you're interested in hearing about? I have more comments coming in.
Well, I mean, so kind of moving away from the bracket a little bit, just a chart that I think the streams have been all over that has really captivated a lot of attention. Ethereum Classic. I mean, if you take a look at that weekly chart, it is a straight line up. I'm just curious what you see when you're looking at charts like that, and what's your take on it.
Richard,
I apologize. Did you say Ethereum Classic?
Yeah, ETC.
I've never even looked at the Ethereum Classic, so let me just take a look here. I guess it's ETC USD.
I did not realize that was up 85% this week.
Jeez. Dude, it's a straight line, man.
Yeah. I mean, obviously you can't, cryptos trade obviously a lot different than stocks. And the thing that is, where does it come from? Up from 25 to 50. So it's doubled this week. And where does it have the potential to go? You've got, let me just draw a volume by price on here. So, the biggest volume node is at about 55, 56. And you can see that was a big horizontal level, September through November, December of last year. So it's getting a little bit stretched. It's tough to say where to put a stop on this thing. I think below today's low, but that would be all the way down. I'd have to put it down here about 42, and that's 8 points. So I wouldn't set a stop that wide. I'd say just, thank God for people who chase these things if you own it lower, and figure out where your risk is. I'm involved in Bitcoin right now, and I have a little bit of, regular Ethereum. But man, great move there. All the, risk is coming back to the market. And I think that's the key theme here is, when you look at Google and Tesla and all the NVIDIA, and then, the crypto, the risk seems to be back on in a pretty major way in the areas where people like to put a lot of money into, when they're in the mood to take risks. So Bitcoin's coming up to an interesting spot near 45,000. But maybe another 10% left in that Ethereum Classic before it starts to digest these gains.
Awesome. Thanks, Brian. And I guess what quick addition to that is when you see something like ApeCoin get launched, which was last week, I know a lot of traders and stock twits were kind of all over that, stalking and taking a look. Was that something that gets on your radar when those things are launched, or is that kind of just noise to you?
It's noise. They're like SPACs, really. I mean, a lot of these SPACs are, they go SPAC because they're not qualified to do a regular IPO, and they trade on hype, which is great for, short-term trades. In ApeCoin, I don't know what it supposedly does. It maybe doesn't do anything at all except, hype based on the apes. And, if you can make money on it, great. Don't buy the hype, but, trade. If you can trade them profitably, then great. That's all they should be looked at as is gambling products.
Thanks for sharing that, Brian. Appreciate it.
Yeah.
All right. Let's throw a couple other here to Richard. We've got you and Snow.
Sure thing. So let's talk about Unity first. Let's bring up that chart here. This is another one that's in a downtrend. It's below the 200-day. Still stuck below that 50-day moving average. That's been pretty much stamped at the high both yesterday and today. It's had a really nice rip off the lows here, up 30% in just 4 days. And now we're back above the 21, but still, as I said, below that 50. So I love to see it kind of go sideways a little bit, pull back, see that volume dry up, which seems like it's already started to do, and then see it push up the right-hand side. But still needs a lot of work to do before it can definitively start a new uptrend and make its way back towards those all-time highs. What was the other one? Sorry. I usually write them down. Snow. There you go. I always forget them. All right. So pretty similar situation with Snow here is we've had a downtrend. This looks, you've got that gap down, so it looks a little bit worse here, large volume, but we've had a similar really strong push up off the lows, up about 35%. We're flagging out sideways here, just kind of chopping around that 21 exponential, still well below the 50-day here. That's all the way up at 256. So if we can get a push through kind of Tuesday's high, that pivot 229, that would be ideal. I'd love to see tomorrow kind of fall through from today's strong price action off the lows. And then that 50-day could be a kind of logical spot to take off some profit if you do use that as a swing. But we're still below that 200-day moving average and still pretty deep within a even potential base here. The overall base was almost 60%. I like seeing bases that hold above that 35% depth mark. This to me suggests that there's some distribution going on. And this one still has a lot to prove, in my opinion. I'd love to see it kind of build out over the next few months and kind of get back towards that level where the 200-day moving average is near 300. And you've got a logical pivot around, 304, 305 up until, 320s there, where we could kind of form out maybe a little bit of an inverse head and shoulders, set up a kind of pullback handle right at that area, and then that could start another nice uptrend. But this still has a lot of work to do from my perspective before I would really treat this as a leader in the stock that's really worth my capital.
Okay, awesome. Tommy, any others that pique your interest?
Off the top, I know this is kind of probably an excruciating topic for the people up here, but I mean, we couldn't help but notice, the action going on in the meme world this week. Things like, AMC, GME. I guess how much you want to incorporate Tesla into that. So like when looking at those kind of, tickers, I mean, are you ever, making a trade there, or are you just kind of observing this stuff from the sidelines?
I did a little bit last year in GME, kind of at the beginning of the move. And actually, it's kind of funny that AMC I purchased in January of 2020 at, I forgot the price, or 2021 rather. And, I bought it, I think, like, let's say $1.20 for the January effect. And then I sold it, I think, at $1.19 4 days later, just getting tired of it. Didn't think about it till it started making that big run, and then I got involved in GMC a little bit, or GME rather. But right now, they're kind of dead to me. They're just a little too wild for my taste. So I try to stick with stocks that have a little bit more of a sane chart pattern. These are a little bit too schizo for me.
That makes a lot of sense.
Yeah, I mean, if I really wanted to sit down and get in there and sling it around day trading, then those would be great opportunities. But that's not my personality anymore. I've kind of moved beyond that in my trading career. I get the appeal though.
Hey, Brian, do you have a hard stop at 4?